what strategy has the highest return out of these three? Now, this is what we're going to be going over today. I recently did a tweet on this topic, and it was kind of a little thought experiment where people could comment below and say what one they thought had the highest return. Now, I saw a lot of the good approaches. I'm actually going to cover a couple that were mentioned in the comments below the tweet, and then we're also going to go over some reasons why some of them didn't work, and we're going to overall try and give you a clear answer of which one is the best. Now, the most common approach people used was the expected value for each strategy. The expected value is just the average outcome of the trading strategy over a certain amount of trades, takes into account the probability of each outcome and the magnitude of the outcome, positive or negative. We can simply work out the expected value by multiplying the probability of winning by the profit factor and subtracting the probability of losing by the risk factor. So let's calculate the expected value for each strategy. So you can see here, each calculation is listed out. They're pretty basic, so I'll walk you through one, but you should understand the rest by then. So we have a 40% win rate and a profit factor of 2. So we do 0.4, which is the win rate, or the amount of times we win, times 2, which is our profit factor, minus 0.6, that's the amount of times we lose, times 1, as we're only risking 1 on each trade, and then you would get 0.2 as our final number. Now, you can clearly see the most profitable strategy here is the 70% win rate and the profit factor of 1.2, as it has 0.54 compared to the other ones that are around 0.2. However, some people could easily argue that calculating the expected value may not provide an accurate representation of the actual returns, as it can either assume it's on a very long time horizon or a very short time horizon, depending on how many trades you're using or how far you're thinking out. Now, hence another approach we're going to go through and talk about is just using the number of trades and doing it manually like that. I did see a couple people in the comments use this kind of method, where you would simply the results over an X number of trades. It's essential to note that the simulating of the outcomes over a specific number of trades to determine the profitability of a trading strategy may have some variability in trading. In trading, the order of wins and losses is random, even when you have a static win rate. This means that it's impossible to predict the exact sequence of wins and losses in a given period accurately. For example, a strategy with a 70% win rate may experience a series of consecutive losses or wins that deviate significantly from the expected value in the short term. Therefore, simulating the outcomes over 10 trades or 100 trades, as in one example, may not provide the complete picture of the profitability of a trading strategy in the long run. It's crucial to evaluate the performance of a trading strategy over an extended period, considering factors like drawdowns, volatility, risk management principles, and kind of the rest of the other things we'd pay attention to. Trading is inherently unpredictable, and you must be prepared to manage the variability of outcomes with great risk management. As demonstrated in this video, which I'll quickly play for you guys, we can see how we are getting varying results. So this is just basically simulating the equity curves with the inputs of a win rate and the win-loss relation. And we're doing it over 100 trades, and we're doing a number of simulations of 5, so 5 different lines, and we're doing 1% risk over trade. Now, this is a great way to visualize how each one of these are different. So you can see the 70% one was pretty uptrending, not much drawdown, and then when we change it to 50, we're getting a lot more drawdown, we're getting a lot more variability, some of these are ending negative, and we're not overall getting much better performance than the 70%. So this can really help us identify that potentially there may be an issue with the 50% win rate one and the 40% win rate one, and the 70% one is still seeing like it could be the best performing, just as we calculated the expected value. Let's actually go a bit deeper on this, and then we can find out like a couple more reasons. Now, why did I tweet this? The thought experiment tweet was really aimed to shed light on the different ways traders can compare and evaluate trading strategies. It's crucial to understand that there's no one-size-fits-all approach to choosing the best profitable strategy. The tweet highlights that the high win rate usually means higher returns, but other factors such as profit factor, risk to reward, and your general trading style, and also we didn't really even factor in the probability of psychology and all that kind of stuff. Moreover, the time horizon and the number of trades can really create variability in the results due to the random nature of trading outcomes. The tweet is aimed really to bring attention to the fact that traders need to keep in mind this variability in their strategies, as a 70% win rate does not mean you're winning 7 out of 10 trades. Most of the time in trading, that will be highly variable, and you could even be winning only 4 out of 10 trades. So yeah, just keep that in mind. Now, which one is the best if I had to pick it? Now, I've basically just simulated these 3 different strategies using the same tool I just showed earlier, and we're going to see the average performance of each, and we can also see the max equity and stuff. So for the 40% win rate and 2 profit factor, we can see the average performance is about 24%, with the highest equity of 17,000 starting at 10,000. So, not bad return at all, but we're just getting about 24%. Now, the 70% win rate one with a 1.2 profit factor is getting over an average performance of 70%. So on max equity, it was 21,000, which means on an average performance, you're getting the best performance pretty much of the 40% win rate strategy. And for the 50% win rate strategy, we're getting about 29% performance. So definitely better than the 40% one. However, not that much better really, and definitely is not better than the 70% win rate strategy. Now, thank you for watching, and if you enjoyed, please like and share it with anyone else who might be interested.